In March 2021, 9 of the world's largest banks lost over $20 billion in a single week. They had no idea it was coming. The man responsible had already been banned from the securities industry once before. His name was Bill Hwang, and almost nobody outside of Wall Street had ever heard of him. This is the story of how one man secretly controlled over $160 billion in stocks, and how it all collapsed in 48 hours. Bill Hwang was born in South Korea and immigrated to the United States as a teenager. He studied economics at UCLA and eventually landed at Tiger Management, one of the most prestigious hedge funds in the world, run by legendary investor Julian Robertson. Hwang was sharp, aggressive, and deeply religious. He described his investing as an act of stewardship, a way of honoring God through financial discipline. In 2001, Robertson shut down Tiger Management and gave Hwang seed money to start his own fund. He called it Tiger Asia. For nearly a decade, Tiger Asia was highly profitable. Then, in 2012, it all went wrong for the first time. Tiger Asia pleaded guilty to wire fraud charges related to insider trading in Chinese bank stocks. Hwang paid $84 million in fines and was barred from managing outside investor money. Most people assumed that was the end of Bill Hwang. They were wrong. Hwang converted Tiger Asia into a family office, a private fund that manages only personal wealth, not outside investors. He called it Archegos Capital Management. Because it was a family office, Archegos was largely exempt from the regulatory requirements that apply to hedge funds. It didn't have to disclose its holdings to the SEC, the same way public funds do. And Hwang used that privacy to build something extraordinary and extraordinarily dangerous. Using financial instruments called total return swaps, Hwang made deals with banks that allowed him to gain exposure to massive stock positions without actually owning the shares directly. The banks held the shares. Hwang held the risk and the reward. And because each bank only saw their own piece of the arrangement, none of them knew how large his total position actually was. By early 2021, Hwang had leveraged his personal wealth of roughly $15 billion into a total exposure of over $160 billion. 9 banks were involved. None of them had the full picture. In late March 2021, several of the stocks Hwang had heavily concentrated his bets on began to fall. Viacom-CBS announced a share sale that sent its stock price dropping. Archegos had one of the largest positions in Viacom-CBS in the market. As the price dropped, the banks holding the swaps began issuing margin calls, demands for Hwang to put up more collateral to cover his losses. He couldn't. On March 25, 2021, the banks began liquidating his positions. Goldman Sachs and Morgan Stanley moved first, selling off billions in shares before other banks could react. Credit Suisse and Nomura waited and paid the price. Credit Suisse alone lost $4.7 billion. Nomura lost $2 billion. In total, the banks absorbed over $20 billion in losses in less than a week. The S&P 500 barely flinched. Most of the public had no idea any of it had happened. Federal prosecutors began investigating Archegos almost immediately. What they found was a systematic effort to deceive. According to the indictment, Hwang and his associates had deliberately misled the banks about the size and concentration of Archegos' positions. They told banks they were diversified when they weren't. They coordinated trading to artificially inflate stock prices, which in turn increased the collateral value of their positions, allowing them to borrow even more. Prosecutors called it a fraud of staggering proportions. In April 2022, Bill Hwang was arrested at his home in New Jersey and charged with racketeering, securities fraud, and wire fraud. His CFO, Patrick Halligan, was arrested the same day. Hwang's trial began in May 2024 in federal court in Manhattan. His defense argued that he genuinely believed in the stocks he held, that his trading was legal, and that the banks were sophisticated institutions who understood the risks they were taking. Prosecutors countered with testimony from former Archegos employees who described a culture of deception, deliberate lies told to banks to keep the money flowing. On July 10, 2024, The jury found Bill Hwang guilty on 10 of 11 counts, including racketeering and securities fraud. In November 2024, he was sentenced to 18 years in federal prison. In January 2026, Hwang filed a pardon application. As of now, no decision has been made. Archegos didn't collapse because of bad luck. It collapsed because 9 of the world's most sophisticated financial institutions each trusted that someone else was asking the right questions. $160 billion hidden in plain sight across 9 banks, gone in 48 hours. If you want to understand how the biggest financial implosions in history actually happen, that's the Fraud Files. Subscribe for the next case.